Hello again, all you capitalist pigs. Welcome back to another Triple Threat Trading Forex market preview. My name is Jason. I am your host. For those of you who are joining me for the first time, thank you so much for doing so. I really appreciate it. I appreciate you taking the time out of your week before the market opens to watch this video. And for those of you who are among the now 32,000 people who receive this email every single week, and for the thousands and thousands and thousands of you who watch it, thank you very much. You guys are the reason that I continue to do this. The letters and emails that I receive from people telling me, you know, how much they're getting out of the video and how much it's benefiting their trading is why I continue to do it. But enough with that. We've got a lot to cover this week, and so I'm going to go ahead and start blowing through these charts. We're going to start with Euro Swissy. Euro Swissy on the daily chart, looking for a press up into this 1618-127 extension around 3270. Now watch this level back here around 127.84. If we get below this level, then everything I'm about to say means nothing here. But if the market will rally here, if we get another move up into this 1618-127 618 retracement area, there's going to be an opportunity to short here. You also have, if I consolidate the chart, you also have trend line resistance there as well. So if this market rallies, we're going to get trend line, a couple of different Fibonacci extensions, and a Fibonacci retracement level all kind of meeting up against structure around 3270. This is going to present a potentially really nice area to look to get short. So for those of you looking for a play, Euro Swissy, that might be one to watch for next week. Let's go ahead and take a look at the Euro. Euro has come right into a 382 retracement. Let me fatten it up here so you can see it. Has come right into a 382 retracement. When we get those 382 retracements, we look for the market to continue. That 382 tends to indicate that the market has strength, and we've got a very shallow pullback, and now the market is going to rally. You have some ratio confluence around 618-127 extension around previous structure resistance here. So that's going to be the first level that the euro will test if it breaks 38.61. If not, then this is just a channel trade. It's not something that we're interested in. We go ahead and take our line tool here, and we project this out. Let's just see what happens here if we do this. Now, naturally, we're above the ratio confluence that I just talked about on an ABCD. We've actually got a little bit of a butterfly pattern here potentially, but what I want to look at very quickly here is whether or not we've got any structure back here. Structure resistance, resistance, support, support right in there. Guys, this is important stuff when we take a look at this. I don't know what that is. Must have been some training that I did. All right. So if the market presses up, we will have a butterfly pattern here. 144.20s. Look left, structure leaves clues. Resistance, resistance. Keep going. Support. My phone's ringing. Oh, it's my wife. She's going to have to wait till we're done with this video. So we look at this across the board. Support, support, support. Resistance, resistance. And now we look at a potential pattern completion at that same zone. So we'll look. You can look for on this, guys, when you look for this stuff, pay attention to market harmonics. Pay attention to those measured moves. Look for those pattern retracements, those pattern extensions, and where they come in at, and do you have any ratio confluence in there? There does look like there is some interest here, both around 141.30 and 144.26. So both of those levels will be key levels as we move forward. Let's take a look now. Pound Swissy. Potential Gartley pattern setting up here on the Pound Swissy. X to A to B, B to C, C to D completing at an 886, 158 80s, 158.90s, 886, 1414 ratio confluence. Very nice risk reward on this. Look left, stops have to go above X, but there's a nice area here where the market could roll over. You got your trend line coming in here. Market may come all the way back down in and bounce off that trend line. Even if it does, that's not a concern to us. If the market tests 158.50s before it breaks below these lows that come in at 148.62, then that's going to be a signal for us to go ahead and get short. So we're going to be watching that level, 158.90s. Let's go ahead and continue here. Pound dollar. This is an interesting one. We just got short. This is a chance for you guys to take advantage, and depending on where this market opens, you may get it at a little better price than I did. 886, 127 Gartley pattern completion at a very, very deep B to C leg. And that B to C leg, when it rallied, now puts the ABCD pattern completion at around an 886. Look left. Here's your Gartley. Boom, 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 boom. Now, it just so happens, traders, that this is also... This is what we call an aggressive C sell. It means the market has come deep into a C retracement, and we expect the market to roll over. If the risk rewards on these are very good, which is why we decide to take them, and they also are pretty good as far as probabilities go. But what's more important is this is an aggressive C sell on a 4-hour time frame, but on a daily time frame, it's also, or sorry, it's a Gartley pattern completion on the 4-hour, but it's also an aggressive C sell on the daily. We can take this aggressive C sell. If we go out to a daily chart, you see it a little bit better. Let's just do it. Let's go out to the daily. We take the aggressive C sell here, stops above the spike high, and look for, boom, the 127 extension. First stop will be the ABCD pattern completion around 159.50s, but we can get through that, come all the way down to the 786, 127 extension, and now we have a buying opportunity. This gives us a chance to get short in the market on an aggressive C sell, buy them back up at a 127 on a Gartley pattern completion. Bada bing, bada beautiful, right? So these are just some of the things that we've been looking at intraday in both the live trading room and in the insider program that we have. Now, I'm not going to pitch either one of those. I believe that I've got to check, but I think that the buttons are up and you guys can subscribe to those now. We've kept that pretty closed just to a select number of people while we were, kind of working out the kinks and making sure that everything was flowing well, but everything's going great. The live trading room produced about 1,100 pips in the currencies alone this month in about 17 days, so that has been just stellar. And so there is an opportunity there. We want to let people get involved with that in a way that we haven't before. So I'll send you an email when that comes up. I don't know I can't remember whether we've got it up or not, and I'm not going to check right now. But 127 confluence, Japanese yen. This will be a Gartley pattern completion. You can look left and see where the spike highs come in. You've got extremely low risk reward, or extremely low risk, very high reward on this trade if we come up into 84.40s. So guys, continue to watch this level. This is the level that we had been watching previously. You can see where the market's going to come into, 84.40s. Boom, right there. Look at that resistance. It's going to complete the Gartley there. And then we'll have a chance to sell. Sorry if I'm moving fast today, guys. We're already running. And pound yen, got some more things to cover yet. Let's drop this down to a 240, 4-hour chart. Refresh it to get rid of all the bugs. And you see the double top. You see the bearish divergence. Do we have resistance? Let's go out to the daily chart. Do we have resistance? We do have some resistance. It's minor resistance, but you can see support, resistance. That's why we look left, guys. Always look left. Always look left. Structure leaves clues. All right? Bearish divergence, double top high. That alone, for some of you, is going to make this trade viable. Stops above the spike highs. Looking for a press back down. For others of you, you may want to wait on that. We've got not quite an ABCD pattern completion here. We're a little short of it. But again, opportunity, opportunity. You start to see these things add up again and again and again. Every market, every time frame. We could go down to the 1-minute chart and do this exact same thing that we're doing now. Once your analysis becomes, you're keen enough with your analysis, this sort of stuff will begin to come to you, and you just any market, any time frame. And once you're fast enough with it, once your eye recognizes the pattern, you can drop down to a much lower time frame, do the same thing, and quickly, trade the market intraday using these same patterns and techniques. That's all I got for this week, guys. Is we've got the next course coming up in March. We are feverishly working on that to try and get those things ready to go. We will be offering again a chance for you guys to come in and learn with us and train with me for about a week and a half, 2 weeks, right before that course kicks off. Let you guys see what I do, see how I teach, get to know me a little bit better. All of those things, we'll be doing. I am, of course, speaking at Forex Joe's, the OU Options University, what's it called? Forex big event, and that's going to be on the 2nd, and I'll be speaking on the 3rd, I believe. It's the 2nd, 3rd, and 4th that it'll be held. I'll have more information out to you guys, those of you who have signed up for that already, it's along with your password and things like that, so you can make sure you get into the room and all of those types of things. So until next time, guys, good luck and good trading. Questions, comments, concerns, you can email me. I do read all the emails, although I do not respond to all of them. There's simply too many. But I do make a point to read what everyone is writing, and I appreciate your guys' thoughts, your guys' concern, your guys' care and consideration. And until next time, good luck and good trading. We'll talk to you soon.